Hi, welcome everyone. I'd like to thank you again for attending another one of HomeXpress's webinars. Today we'll be talking about non-QM made simple here at HomeXpress. We'd like to thank you for your participation and for your support here at HomeXpress. Here are some of the items that we'll be covering today during today's training session. A lot of useful, important information. Like to make sure you guys are taking some notes, and hopefully you guys have some wonderful questions for us. As far as who our presenters will be today we have David Greider with us, who is our Senior Vice President of Wholesale Lending. Myself, Albert Martinez, who is your corporate trainer here at HomeXpress. And with us as well as our special guest is one of our East Coast area sales managers, Carlene Tillman. So before we get going, Mr. Greider, what do you think if we ask the room a couple of questions about their summer? What do you think?
Oh, I love it. I love these poll questions. We get so into just talk about loans. Let's take a poll question. I love it.
Absolutely. Here we go. So let's go ahead and let's ask the room. So what is your favorite sport to watch in the Summer Olympics? So we have some options here. We have track and field, we got basketball, we got gymnastics, we got wrestling, and we got swimming. So not wrestling, really. Nobody's
No
liking
one,
a
no one's hitting wrestling.
nobody's liking a wrestling. That would
Yeah,
be that's my choice. But okay, seems like
I'm
the
going to say
masses.
it's track and field because that's what I like watching. I like watching the sprints, the relays, and that kind of stuff. I don't know. I just maybe as a kid, that's what I used to watch all the time.
Absolutely. All righty. So let's go ahead and let's end this poll and let's share the results and let's see what the mass is like. So it looks like
Wow.
wow. Wow, it's either the gymnastics
Gymnastics.
or the swimming.
Swimming and gymnastics. Okay, I got beat out on that, and that's awesome. But I appreciate this, right? So yeah, they're coming up real quick, right? So kind of interesting.
All righty. All righty. So with that, I'd like to go ahead and hand it off to you, Mr. Greider. Thank you.
All right, great. So we'll kind of begin here. What I thought we'd do, Albert, as we go to the next slide, is kind of just give you a quick background. I haven't done this in a while, especially for those new here coming on to a webinar. Is like, who is Home Express? So I'm going to go through some little bit of slides on this, and then we'll get into some programs, and then we can go from there, right? So we're primarily a wholesale non-QM lender, right? So we're top three in that category generally. Some months are a little better, maybe drop to five. You know how it goes on this type of stuff. But over the last few years, we've added in FHA, VA, conventional, and we also have prime jumbo loans, right? So it's not just not QM, but that's where we started as you go through this. And we're kind of the reverse today, as I kind of point that out, is I've seen a lot of companies jump into non-QM, right? Whether it be Rocket, UWM, other companies, Kind Lending, and they start out with the agency government type of lending, then try to non-QM. We've been doing non-QM for a long time, right? So and then added in the agency and government. And for your convenience, we have two operation centers, East and West Coast. So we kind of service your time zones. We are, licensed across the whole United States, 46 states and District of Columbia. And a little bit about us, we're non-QM experts, meaning we are the true lender, right? We're not going out to another investor's guidelines like that. We underwrite to our own guidelines, fund with our own money. And that's important as you go down the trajectory of non-QM, especially your accident for exception. And with some companies, they have to go ask, it might be 3 or 4 days. We make the decisions in-house right away, then it's signed off. You're done. Don't have to worry about it. Executive management, we've been many years in this non-QM. Probably going on 9 years coming up here, but we also have background in manual underwriting from a long time ago. So we understand this and how to do it. We have delegated underwriters in-house, so we can get some of those FHA, VA deals done for you. We'll go to the next slide as we kind of go through kind of the steps. I figured a timeline. So our beginning was started 2015. I'll talk this a little bit because I've been doing non-QM kind of from the infancy, right? So, I started in 2015 in a non-QM. There's a few other companies that were out already, but it's a lot different today. So this is kind of like a progression. When I look back in 2015, a lot of people didn't know about non-QM, didn't know the rules of Dodd-Frank and what these loans look like. And it's not subprime. And everybody goes, when I first started here, to go, oh, that's like subprime. They are not. These borrowers are well qualified. The average FICO is usually 730 to 740. Average LTV is 70. They have reserves. However, they just didn't quite fit the agency guidelines, right? So if you go from the GFC into 2015, 16, there was a big gap of where these borrowers could go. And they usually had to go, if they needed a loan, especially a home loan, private money were very expensive and points. And this product was to bridge that gap for, either loan size too much, because that would be going into the non-QM or the manual underwriting back then, or they had to go to private money or some sort of that for their loan. So we kind of did the education, for the first few years of what non-QM is, and that not just us, a lot of other companies that started a long time ago did that well. And then we started the progressions, right? So we start the progression of, hey, getting the disclosures down, what non-QM is, and that, and we took a slow pace, and we understand that as you progress from kind of a manual thing to get the technology in. So we started the technology in 2019 with our portal. So we're going to talk a lot about the ease of use with our portal. And in 2019, the first year funded $1 billion. Very interesting times in 2020, as everybody kind of know, and we're kind of seeing some of the effects of it today, right? But in 2020, I remember the first thing, you come off $1 billion in non-QM funding, we're going to have a great year. And we actually anticipated a great year, but with the COVID and some of the shutdowns that happened, it actually froze the capital markets on the non-QM. So all the lending that kind of was done there for a while was agency and government type of lending. But even during that time, we didn't lay off in people because we know it's going to come back. This is a needed product out there in America. We actually still opened our Tampa Center. Couldn't do a loan in April or May, but we opened it up and knew it was coming in and did a lot of training on that. So in June, we kind of came out one of the first in the non-QM 2.0. That's what we called it then, kind of going through trying to figure out what was going to happen. And during that time, we got our licensing for FHA, did all that. So in 2021, we launched FHA. 2021 was a record year for almost every mortgage company, right? Coming close to 2 billion. Then it kind of the present day. So we saw these big rapid rate movements going up, right? If you kind of remember that in 2021, 2022. And how did you do that? So, we took strategies to do that. We put some floors in place and hedge, right? A lot of non-QM companies don't that. So we have a great capital markets team. And so we're able to be profitable quarter to quarter. I'm not saying it was a lot of money because it wasn't, but we're able to navigate that high rate environment, right? To make sure we have the value add for you today and be there for you and in the future. And that's important. So in 2022, we added the VA, Freddie Mac, short-term rentals. And this year, we're kind of making it easier for you to price your own loans, upload all the initial submission requirements and conditions, and you kind of take more control of it. And so that technology is there for you. And so we got a lot of enhancements here. I thought it'd be easier. So before we get into, really what Carlene does day to day, and so I want to be on her of dealing with you, our partners on this, and is to kind of go through just a quick overview of some products, right? So if we could just kind of go through that real quick, and again, as I go through this, please put any question you have, whether it's the industry related, HomeXpress related, guideline, program, because again, we try to keep these to 30 minutes because I know your time's valuable, especially with the rates going down. Hopefully, companies see that and you can lock. So that's kind of some good news for us to have today. But this is just a quick overview, right? And when I go through these, please, your biggest asset is your AE, right? Your AE is going to, when you talk about scenario, where to go because it doesn't fit, the Fannie Mae guidelines or Freddie Mac or loan size, so that might be have something that you're really going to call your account executive to help you structure that. And we do have highly trained account executive responsible to get that deal, let you know how we can do that and get that deal funded for you. But on our consumer purpose, these are TRID loans. You have minimum FICO 620. We have LTVs of 90 on a purchase. We can go to 55 DTI, right? Again, we're looking at residual income. So as long as the residual income is high, that kind of makes sense. We do loan amounts to 3 million. We've done a few more because we're a true lender, but you got to kind of keep into your space what it is. Our rates are really good. We can watch that to make sure we're highly competitive and consistently out there. Sometimes we're the best, sometimes one or two, but hopefully our service there, when you come, you're going to see that will be there. And I was kind of talked to somebody. It's like, what do you guys do? Most of this is how it started in non-QM. Kind of the timeline is these self-employed borrowers, right? Because self-employed borrowers have good accounts. There's a reason they go self-employed, right? They try to, keep their retained earnings in their business accounts so they can lower their tax liability. And that's probably one of the main reasons why it doesn't fit agency guidelines. And we say, great, we'll do a 12-month bank statement loan for you. And by the way, there's no ad to do from full doc or 12-month bank statement. So it's really the same price as full doc. We do that. That's kind of one of our mainstays is being a self-employed expert, be able to structure that. And there, even besides the 12 bank statements, we have some asset programs, some P&L only programs, P&L assist. I could do a webinar for 2 hours on all the ways we could structure your deal to come in, whether it's from 1099s. And there's a lot of companies that have switched from the W-2 1099. They're really not a business owner. We have programs for you on that. Most importantly, we're a common sense underwriter. Just tell us a story, and if it makes sense, we can get that deal because we can make exceptions here, and we do it every day to try to get that deal. So just try to get those scenarios over to us. Credit events are okay. That's another reason why it might fall out of agency. Non-warrantable condos or property types, short-term rentals, maybe it's rural. Just let us know what you have, and we'll be able to help you out. So if you're struggling on a consumer purpose loan, reach out to myself, and I'll get you connected with a highly trained account executive. The next slide, we're going to go over what I think that, most of you have seen a lot of talk today on. If I look at all the webinars out there, I think this is the best. This is the top one being done by any company out there. We're DSCR experts. Well, okay, and I get that because investors are out there and they're looking for opportunities because of housing shortage, and it's probably more geographically where they can buy some homes that are reasonably priced. And if you look at the rents, the anticipated rents they can get versus their payment and what there is, it makes sense to them, right? In certain areas. So the minimum FICO is 620. We do have, I say no income documentation because we're basing the loan on the credit profile of the borrower. Even if they vest in an LLC, there's a personal guarantee on that. And the cash flow of the property, right? So we take the gross rents on that divided by the PITIA, and that's high, one or better, you can get to higher LTVs. But we can actually go down on that on the DSCR down to 0.5, right? Again, the LTV is going to go down because a little bit higher risk on that. But there's a lot of people that understand that they might buy in an area, rent it out for a couple years, thinking it might be a second home down the road, and they just want the opportunity based on that property now and understand that, or want to, can add to their portfolio that mix, right? We do loan amounts at 2.5 million. You can do income docs on this as well. You get a little bit better rate. You'd have to worry about the DSCR percentage because it's an income file. You don't have to, look about, hey, how's the DSCR? What's going to happen if I'm above one or low one? So I highly recommend if you can qualify on bank statements, please do that. You can qualify on the interest-only payment. And we have some really streamlined guidelines on that. And again, I think our reputation's out there, know that we try to get these done fast for you with limited, just the documentation needed to make a good credit decision and help your borrower get that property purchased or that refinance when they need to cash out to get more properties or improve the rentals they have. We can just use the 1007 or 1025 5, that's units. So you really don't need to get the lease agreements in most cases. Again, it's available in 46 states, DC. I'll point out that there's many states that you do not have to be licensed in to do these business purpose loans. So check with your account executive. They have a list of states. So if you have say you're a loan officer in California and you have a borrower looking for rental properties, say, hey, this place in Texas or Florida, those are states that can do that loan for that borrower that they have if they're buying investment property in those states. Again, short-term rentals, condo hotels, we do foreign nationals. That's what I say. These can be really expanded. So whatever scenario you have, I can just contact your account executive, and it can get you a way to structure that deal and give you a quick kind of answer. Hey, let's explore this. Here's what I need to get that done to help you get that borrower off the market and to close that deal and help you get that next referral from your real estate agent. So talk a little bit about on the programs. Now we can talk a little bit about, before I go to agency. Now, when I talk about agency and government programs, if you have doing this internal, right, and you have your system there, we're not after that, man, because I talk a lot of, as a wholesale lender, we want to make sure we're doing our job, and our value add is to help you close more loans that you can't do in your particular office right now, right? And so that's why we have some of the programs. I want to point it out is that, our pricing's really good on FHA, right? Minimal overlays, and we can do some manual underwrites starting at 550 score. Those are some big things. And the loan sizes were very highly flexible on the lower loan amounts as well in our FHA. VA and Freddie Mac, we see a lot of that stuff coming in recently as we're growing this segment. So don't just think of it as a non-QM. Yeah, we're experts at non-QM, been doing it for 9 years. But we've added in over a few years now some agency government programs. So if it kind of doesn't fit, get together with your account executive, and you're able to price these out on the portal, upload everything, and submit it all by yourself on this. Just run the DU or AUS system, and you're able to get that in. Now, making it simple for you, that's why I got Carlene here, right? So she's going to talk about some of our portal and how easy it is for you guys to kind of do business with us, right? One is, I'm hoping everybody talks, especially on a non-QM deal. You're probably having a discussion of what they're trying to accomplish, what some of the obstacles you have, and then we're going to ask you some questions. Can you get this, that? Hey, we got a deal, right? But I'm going to ask Carlene some of the value adds with our portal and kind of go through that. So Carlene, over to you.
All right, thank you, David. Thanks for the introduction. As with the webinar title, Making Non-QM Simple, part of that is definitely going to be the technology and your visibility into our loan process. And so we're just going to touch on some of the value adds with our XConnect portal. Pricing is right there at your fingertips. Being able to save those pricing scenarios kind of in the inception of a loan as you're starting to talk about it and figure out what kind of rates are available. When you do that within our system, the AE can automatically see what scenario or pricing that you've saved, and that way, if, for example, you don't get results, they can jump in and give you a call. We're the experts again on our programs, and don't expect you to know all of our guidelines and the ins and outs. But if you don't get eligible pricing for whatever reason, we can get on a call and walk through it together and determine what fits in the appropriate pricing for your scenario. You can lock directly through the portal once you get a loan into process. And again, that visibility into our loan process as it progresses. You could view underwriting and operational notes once the loan's submitted. We have a tool called Rentometer, which is actually very cool. This is a tool where you want to get an idea of what the market rent might be for an investment property. And you can put in the address there and it'll spit out a report for you. A lot of times too, I've had brokers share that with appraisers. And whether they get their data from different places, and it's been successful depending on the area and the property. And then we have our income desk, which is our ability. We can do this at any time in the process. If you have bank statements, personal or business, or even a combination, we want to get an update or breakdown and see what that monthly income looks like for your borrowers. We can do that in advance anytime through our income desk and give you that breakdown. So those are some of the value adds and things we can do as associated with our portal. And then we can just jump right into the portal itself and show you how easy it is. So again, one of the first things you're going to look at or be interested in when you're starting a new scenario is the pricing. So a pricing tool, when you're in the portal, you just go right in to your heart's content, run as many scenarios as you need. But the main items, and I see there's numbers here, but obviously fill out the areas that are with asterisk that are required. The zip code is really important for, let's say, an example, depending on a DSCR, whether or not there's a prepay in that state, for example. But so the zip code there, very important. The save the search is what I really want to touch on. So you fill out all the criteria here. And I personally would hit search first to kind of see what you get as far as parameters. Because let's say you do not get any results. If everything's ineligible, I don't want to save that search necessarily, but you can go back and change the parameters as needed. And then saving the search is the important part, that if you don't do that, this scenario is not going to pop up so the AE can do that with you as well. So in that perfect example, if you didn't get results and you hit save there, then we can see it, get on the phone call and figure out why you didn't get results, or something we can tweak, or maybe they didn't qualify in that particular situation. Next slide, please. And then here's what the screen would look like once you hit that search button. You would either have eligible QM results, non-traditional, or ineligible. In this case, it's just a quick example of the eligible result says Core X. That's one of our programs. So you can see the rate stack here. You can click further into the details once you select a rate if you want to look further at the LLPAs. Next, please. And then here's where, if you selected a rate, you could print this and keep it for your records. Again, if you save the search, it'll be there in your scenarios. If you select the check mark next to the rate, it's going to pop up another box that's going to allow you to see the breakdown of the LLPAs in more detail, what the hits are. Next slide, please. And here's what that looks like. So a little bit about the adjustments, just a more visible breakdown of where the adjustments are coming into play, in this case, the LTV and FICO. And the next slide, please. And then, as I mentioned in the first slide, as you go through, if you don't get results, what you would need to do to go back and change those parameters is go to the very top. It says search fields. And when you click that again, it takes you back to the main screen where you input everything. And then this is what's going to allow you to make any necessary changes. Let's say, for example, you didn't get results because we didn't have reserves put in and we need the reserves for that particular loan. We could make that adjustment, save that search, or search again, and then hopefully we would get different results there. Next slide, please.
Hey, Carlene, before we keep going to the next slide, what do you think if we take a poll and ask the room some of their preferences when it comes to pricing?
Yes, I think that'd be awesome.
All right, let's go ahead and let's ask the room. So as a loan officer, do you prefer to price out your loans on a portal, or do you prefer to do it manually? How about you let us know? I would probably say that not to
Well,
make
you
me
think
fun.
it is there,
Oh,
but
we have
I
one.
don't know.
We have one. We got two people who like to do it manually. All right.
There is a few people like that. They like to have the rate sheet out and that, but I would doubt. I think most people would want a portal in today's environment with all the LLPAs, right? I mean, given some of the scenarios you have.
All right, let's go ahead and let's share the results. So here we go. So it looks like we got 3 people who like to still do it manually. That's awesome. All righty. Thank you everyone for participating. All right, over to you, Carly.
Good deal. Okay, next slide. So after you do the pricing, thinking about, again, the progression of your loan, the next step, as you can see here in the home page of our portal, you have your scenarios, and that's where once you run the pricing and save it, those will stay there. You can go back and review those and make any updates as needed anytime. Once you're ready for a loan to move to the next step, it's ready to get into underwriting, you want to register it. So the registration section in this middle here would be the next viable step. This is also where you will do any kind of income desk review. There'll be the option there to upload your bank statements, and our income desk will go in, take a look at that, do a quick breakdown for you based on the self-employment, their operations of their business, and their expense factor. And that way, again, you can do that anytime in advance also if you do the scenario and it's a bank statement loan. And that way you'll have those numbers to help better calculate your DTI for the loan that you're working. But once everything's done there in the registration phase, that's then where we would move on into the submitted loans and kind of what that looks like. And then next slide, please. So once you hit submit loans, you're going to get a screen that looks like this. You'll have the ability to upload an XML. If you don't have XML, you could type that application in and save all that information. And then what you'll see on the left-hand side here is all of the check marks, meaning we've got everything we need, the declarations, REO, whatever's necessary for the loan and the story. That's very important. The pricing, which you selected, you would hit that pricing option again, which is going to refresh the pricing. Let's just say maybe some pricing had changed since the time you looked at it. And in that case, you were going to select the rate that you want to go forward with. And then there's a little export button to the far right that you see. We select that and it will turn this screen, turn the pricing and loan terms green. And then the next step is you go right in there and upload the documents that are needed. We require very little documents to get a loan into minimum submissions, a minimum submission of documents to get the loan into underwriting. But if you have more, obviously, that's always great. Once you upload those documents in there, you can also go in and put contact management information, which is more or less, things for title and other types of services and solutions that are associated with the loan process. And then at the very end, hit the submit loan. Your account executive is definitely very important. Again, with non-QM, understanding the story, the whole story, how everything impacts with the borrower, the gray areas, and most account executives will jump in there and review that loan for you, with you, to make sure that we have everything we need for a smooth submission. It's going to go right to setup. After initial disclosures are sent out, you usually get an underwriting approval in about 48 hours thereafter. Oh, next slide, please. Thank you. And then once the loan is submitted and it's been approved, this is kind of what it would look like in your pipeline. You go in here, click on whichever loans you may have in the pipeline with us. You're going to see all of the details of the loan kind of at the top in the loan information area. You can obviously click down the left-hand side to see the appraisal information, pricing, liabilities, everything that's pulling through from our LOS. Pricing, you also notice at the top under lock expiration, loans that are submitted are floating at submission. So until you go in there and hit that pricing and lock the loan, you won't have the loan expiration date field populated up on the top section there. And then the conditions, all the things down below. Next slide, please. And then that's the condition part, the fun part, the things we want to get all cleared out so we can get greens and a CTC, which I know is all of our goals. And once you get to that point, reviewing the conditions, you can see notes from the underwriter, like I mentioned in the beginning, and operations. If you have any questions on anything, we're very responsive. We're here to facilitate and walk you through our process from start to finish. I'd say one of my main objections as an account executive is to move out any obstacles throughout the process as well, to make sure that's a smooth process and experience for everyone involved, outside of the scenarios and structuring the loan initially. And after that point, we're getting to funding and closing. And then, as I mentioned earlier, the minimum requirements, we require very little. The 3.4, the upload of the XML, is if you have that, like I mentioned. If not, you can type all that information in right there on the submission screen. The broker credit report, typically we'll reissue your credit report as long as it's within 90 days. We have a fee sheet, that's your pre-CD, your title fees to disclose, and then broker fee disclosure input form. And that's where, very important, we want to make sure that your fees and how you're going to get paid, your processing fee, if applicable, credit, those important fees are there. And then that's it. If applicable, a purchase contract, if it's a purchase. If it's self-employed borrower income, bank statement income, we would need the self-employment questionnaire. And at that point, we probably already looked at the bank statement, so we already have that in the system. And then that's the minimum items that we need to submit. You'd probably get your 48-hour conditional approval shortly thereafter.
Right, Carlene, you made it pretty easy for us. And as you go with and I always recommend this to make it really easy and simple. When you're talking to your AE regarding your scenario. We have these very minimal submission requirements, and we have a box here where you can tell the loan story, right? So, and again, underwriters not really talking to you generally on the initial submission, right? And so if you can tell us the story, and that way they can set up an underwrite appropriate for you, right? So just tell us a purchase. Here's some of the obstacles we've had, or whatever the issue is, because we kind of know that you're going non-QM for a reason, right? And the more you can tell us about that, and this is why it fits here, and this way we're structured this way. Here's what we're trying to accomplish. Will go a long ways to minimize your condition list, so the underwriter knows that, right? So if I go into why HomeXpress, right, and again, if I just go back to the loan, kind of the timeline, there was a real need to help out borrowers that kind of got shut out of the mortgage market for many years, right? And during the transition of this, it's like, where are you going to take these borrowers? And we needed to get, non-QM kind of started out there to get it more practice from 14, 15, 16, where it's really accepted out there. Investors love this product. You see it that their performance of it's been very well. And so that you kind of know that kind of where it's at, and you're gonna be able to help more borrowers. And they're sometimes they don't always stay non-QM; they can go to QM, right? And so it's kind of progression where they're at. But the benefits of it, you close more loans, right? You get to keep your client. It's your next loan too. If I look at rates today, and hopefully everybody kind of saw the 10-year and some of the news on the CPI report. That's great. I don't know when rates are going to go down, but they're going to go down. Now, I did see, and we had a question here, what's going to happen in the future for non-QM. This is actually going to be the best year in non-QM. You go, wait a minute, and the mortgage market kind of shrinking, but non-QM's kind of growing. And there's a couple reasons why. One is when rates were so low and you had appraisal waivers and they're fairly easier deals to get done in 21. And so that's where most of the focus. When you come out there, hey, you got more time. You have more time to kind of understand, learn the programs, be a part of these webinars, and that type of thing to get these down. So when the next kind of rate movement down and the next cycle happens, you're going to be able to do these with a lot of easier. That's why we're putting the technology in place. You kind of get it down. And once you do a couple of these, it's really easy as your AE walks through that, right? And again, our AEs are highly trained. They know how to structure loans and get these closed on time. You look at our technology, you can actually price it, submit a loan 24/7, right? So, and your AEs will be there to help you along that way. We're transparent. You're gonna be able to see this loan all the way through the process. Notes are put on there if it's a kitchen or whatever the underwriter, you'll be able to see it all, right? And giving all these factors, we have one of the highest pull through in the country in non-QM, right? We do have the lock features. We want you to be locking your loans. You're talking to the borrower, right? And when the right timing is. Could be today. I mean, this is kind of volatile. We always go up and down, I think 25 basis points every couple weeks. But just kind of do that. And I always say kind of, once they're sold, and that's what we're trying to do, lock in, get that they'll close, right? Because we all know that if they're getting, non-QM rate today, we're going to see some rate movement just with the economy kind of heading down. Most likely they're going to refinance in 18 months to 2 years anyway, right? So you kind of know that. Hopefully the HPA concerns won't be there with the economy because we still have the affordability, but I think it's more geographic than across the board on some of those issues. So we'll go on next slide, Albert, and some of the support services we do have for you. And I think Carlene talked a little bit about this as she's going through income desk, right? Say you got a borrower, hey, I'm self-employed, tax returns, or I need to go bank statements. Before you can do that, just you can upload, kind of register the loan, kind of what you're trying to do. You're not submitting the loan right now. We will underwrite that income for you on the bank statement, so you have confidence out there going in. Again, just give us the correct information or ask the AE to kind of help you if you kind of do it for the first time. Go through that, but that way you get back some data on it, because really you know the credit, you know the income, you know the assets, right? As long as you know the assets, you know what kind of deal is. It's really the income piece on the 12-month bank statement has kind of been that. So the rest is pretty good. And then you got a real-time data. And again, we do these webinars once a month, right? And you can go to our website to look at some other ones that we have out there, or you can just contact your account executive. They've got some tutorials, some webinars, and they're welcome. They'd love to do a webinar for you at your office there for all those of our products, programs, and how to get the loan into our system, price it, and those type of things. And once you're down there, once you get that down, it's going to be really easy, and we're going to be able to close more loans. And the more you can get up front and do all that, it actually cuts down on your closing times. Right? And it'd be great for you to kind of just let me know if you want a personalized webinar for your office. Just let me know, right? And we'll set that up for you. We'll go to the next slide, Albert. Questions. I know we had some in the chat. I saw some come up. And as we go through it, we're doing questions. We're going to kind of scroll down a little bit on this to kind of show you, and everybody's going to get a copy of this deck, right? So don't have to do that, but how to get approved with HomeXpress, right? And those type of things. But I'm going to put my contact information up there. So if you don't know who to contact, I'm available, right? So yeah, I can't believe that. I get a lot of emails, which is great. I love hearing from you, right? You're our partners out there, so we love being able to talk to you guys about your scenarios, help you out through this process, and help you close more loans. So with that, Albert, I'll turn it over to you so we can answer some of the questions we have from chat here.
Absolutely, Mr. Greider. Thank you for all the valuable information. Carlene, thank you as well for sharing so much useful stuff with the group. So we do have a question with regards to AirDNA. Do you accept data from AirDNA for short-term rentals to determine the income on your DSCR program?
Great question. Yes, we do, but I'm going to go a little more details on that, right? I'm going to say on a short-term rental, make sure it's in a market with high density of short-term rentals, resort areas. Us, you're not going to get the data back that we need, right? So if you're doing them, just make sure you're going to go that direction. We were able to get that for you. Get with your AE on that. But if it's not kind of in a higher density short-term area, it's hard to get the data back. And that's it. So keep that in mind. But yes, that is available.
Awesome. Thank you for that, Mr. Greider. And then we do have another question that says, what do you consider to be your bread and butter product?
Great question. I go back to kind of what we started with, right? Way back, and why it worked out. It is really a self-employed borrower. If I look at it, the self-employed borrower that kind of ran their business, understand the concept of, retained earnings, keep it in the business account, get a good accountant that works on limiting your tax liability. Those borrowers have been shut out. So I think that's really, if I looked at 70 to 75% of the business we get in, it's self-employed borrowers on, on the consumer purpose side, and a little bit on the business purpose, and the small to medium investor that always had to go private money at 12% interest rate, 3 or 4 points. And I've seen them because I'm back in 14, 15 and go, man, that's where they had to go. Now that got a little bit better, right? If you look at some loans, it's not like points or that, really they're like normal loans, but really streamlined for us. So that really opened up the small to medium investor to get products. So that's 70-75% due. The other ones are fringe products, right? Foreign nationals, you can go all these other things that we have, and we're able to do those, and we want those, right? Just saying no, it's just I look at that's probably the two categories we get most in is the self-employed borrower and the small to medium investor on our debt service coverage ratio or income on those.
Awesome. Thank you for that information, Mr. Greider. I do have another question with regards to appraisal transfers. Does HomeXpress accept appraisal transfers?
Yes, absolutely. And I think that's a lot what we've seen over the the transformation of non-QM is that it goes agency or it goes Fannie, Freddie goes over there, and hey, doesn't work for some small reason, right? I mean, I can give you example of how many loans we got in at 16, 17, and I'm looking at these loans. I can't believe they're turning these down. I remember talking to one guy at this bank, and he had to refer it to a buddy to broker it out, and he's going, I can't believe we turned this down. Yeah, his tax returns didn't work, but he's got $5 million in his savings account and only wants an $800,000 loan, and we're turning it down. Yeah, well, yeah, bring it over here, and our rate's not that far off than what it was because he had money down and it was a great bar, great credit. I mean, everything. It was like 790 credit score, putting down 40%, has $5 million in the bank, and they're turning it down. Well, tax returns didn't work. Well, is that really all the whole story, right? No, it's not. So this is where we'll get on with it. So we do get those appraisals transferred in. Or maybe you went to another lender, even if it's non-QM and their guidelines messed up and they have to go outside of where they go because they're not a true lender. They're using someone else's guidelines and it didn't work out. It comes to us and we think it's acceptable, right? Because we make the decision there. We want to hear from you on your scenarios, right? And you'll be surprised at what we can do. If you tell us the story, we go through it. That's a common sense approach, right? On each loan on its own merits, right? That's a little bit different. And so, yeah, let us know. So hopefully that answers that question, Albert.
Awesome. Thank you, Mr. Grider. I did have another question that says, are you allowed to submit a loan without an AE?
Great question, right? Now, our system is designed that you can go in there and we're working on that. So the answer kind of is no, but you're going to get it right away, an AE to contact you on it, right? So it's not like this. You can go all the way through and say, we can give you credentials. You don't even have to be approved with us right now to have credentials to use our portal. So if that's what you want, let us know. We're going to give you AE to kind of set you up with it, even before your approved office of ours, right? Going through that process. So we want you to be able to do that. We want you to be able to submit your own loans, all that kind of stuff, if that's your preference, right? Because I really believe that's okay. Because if it's a deal that's coming off the rails somewhere, an agency or somewhere else, you're going to have that discussion, right, with the AE anyway, and just go through that system, upload it, price it, upload your Mismo, you price it, you do all these different things as Carlene went with you on that. And it's pretty intuitive, so you'll be able to figure that out. Why not submit that loan? You already got it there. Just kind of gives a little bit of a story on it, why we're getting a loan, right? So why is this going non-QM? Here's why. Tax returns not working. We're going to go 12-month bank statements of purchase moving up, all right? And what are they going to do with departure residence? So we can condition it how you're anticipating to be conditioned, right? That's kind of the secret, right? A little bit easy. Help us condition the file the way you'd like it. And if you more, you can tell us up front. That way you can go through there.
Awesome. Thank you, Mr. Grider. And one final question that we got, and I think it's a very important question considering that we're, towards the tail end of the year, getting into, Q3 now. And what is your outlook for non-QM in 2025?
That's a great question. Let me shake my crystal ball here. No. Yeah, yeah, it's I think it's always just going to keep going up right now. I think it's an accepted product out there. The one thing I do is, as I'm anticipating on saying that it's going to keep going up is we have the affordability, right? The housing affordability. Even if you go bank statements, you start looking at the cost of homeowners insurance, property taxes, and what's that momentum going to be? They're going to put more, I know there's no more homes on the market, but I think if we get some relief on rate, that's going to help out, which I anticipate in 2025. We will, just because of the economic conditions. We kind of saw where inflation was a little bit lower than expected. I still, what is it, 3% they kind of put out there. I think there's going to be a lot of anticipation, and the bond market usually anticipates it before they make a Fed move. When we go down 10, 15 basis points already this morning, I don't know if it's going to have a bounce back this afternoon. I've seen that all the time. It goes down, then it bounces back up. But I anticipate, just looking at the economy where it's at, that there's going to be some movements and on the bond side. Again, we all, if you're an agency, you're always looking at the 10-year. Non-QM is more looking at the 2 to 3 year, which will go in there. So it's a little bit different, but it's the same concept. You see the 10-year go down. You can think that rates are probably going to go down in the future. So I actually think it's going to open up, especially everybody that did a loan. And again, people on non-QM are still, it doesn't matter what the rate is, right? At some point in your lives, if your family's expanding, you need a bigger home. if you got to move for your job, right? You're going to rent, buy a house. There's always a reason. So no matter what the rate is, and I still remember my first loan, and I actually went FHA. Man, I was so happy. My rate was under 14%. Everybody goes, well, you're crazy. Again, I get the affordability was different, but I mean, I'm a little bit older. Those are rates back there, but where rates to be. And I think, we went down too low, during after COVID, and we kept it down too low, kind of distorted things. And now we're back up maybe a little bit too high, but what's it going to settle in? 5%? Probably somewhere 5-6% is probably the right target for having a natural market go through. And then we're going to see some movement with people relocating, moving, their family needs, and all those types of things. So 2025, we're expecting to be another increase in non-QM volume.
Awesome. Thank you for all that useful information, Mr. Greta. And those are all the questions that we have for today. So we wanted to, obviously thank everyone for attending and being here with us. And then we will be having another webinar next month where we'll be discussing some more useful non-QM information. So, Mr. Greta, if you'd like to close it up.
Oh, thank you guys for attending. And please reach out to me if you have any questions, and take me up on the offer if you want some personalized presentation for your office, kind of let them know the topics. It could be on, a program, whether it's investment programs or some type of purchases, whatever you need to maybe help you guys. If your officer has questions, take me up on the offer. We'll set something up for you and kind of do a presentation for whatever topic you want. But just let us know how we can do better for you. You're our partners and you're our customers, right? So just let us know what we can do to do better. I always love that feedback. We're trying to improve every day, and you kind of see that by the technology. And we understand that you guys would like to price your own loans, right? Price your own loans, get them in there, and we're going to have that done. So kind of be your partners with that. So thank you very much for attending, and look forward to continued relationship with you guys.
Awesome. Thank you, everyone. As usual, a copy of this training deck and this presentation will be sent over to your email. Thank you all for attending. We'll see you next month. Have a good, wonderful rest of your day.